The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 24th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. I know you'll like this one. I love it. It's the tool I call achieving our dreams. You know, while most people spend the majority of their lives struggling to earn a living, a much smaller number seem to have everything going their way. Instead of just earning a living, the smaller group is busily working at building and enjoying a fortune. Everything just seems to work out for those. And here sits the much larger group wondering, how can life be so unfair, so complicated, and so unjust? Question: what's the major difference between these two groups? What's that difference? You know, despite all the factors that affect our lives, like the kind of parents we have, the schools we attended, the part of the country we grew up in, none has as much potential power for affecting our futures as our ability to dream. That's right, the ability to dream. You see, dreams are a projection of the kind of life that we want to lead. Dreams can and do drive us. Dreams allow us to skip right over obstacles. When we allow our dreams to pull us, they unleash a creative force that can overpower any obstacle in our path. Now, to unleash this power, our dreams, they must be well-defined, for a fuzzy future has little pulling power. Well-defined dreams, they are not fuzzy. Wishes are fuzzy. To really achieve your dreams, they must be vivid. I mean, Technicolor, 3D. The whole 9 yards, folks. If you've ever hiked a 14,000-foot peak in the Rocky Mountains and you thought about the settlers of this great country, you might just ask yourself, how the heck did they do it? I mean, how did the settlers haul all their worldly goods, plus food and water, mile after mile, day after day, week after week, month after month? One thing I can assure you is that they had big dreams. Big dreams, big, vivid dreams. Their dreams were stronger than the obstacles that were in their way. So, go be a dreamer. Envision your future. Be willing to put yourself through the paces of doing the uncomfortable until it becomes comfortable. You know, our great country was founded upon dreams, and those same dreams continue to bring new immigrants to our land. This is the best. This is the greatest country. Live the dream, folks. Live it. Let's go check out the dreams of the markets here right now. We've got the Dow futures up 48 points, trading out at 15,399. S&P futures up about 4 at 1745 and change. NASDAQ futures up 5 points at 3345. Russell 2000 up a point and a half at 1111. King dollar back 2 ticks at 79.30. Not a ton of movement in the currency market, but we'll take a look at that. You've got Goldilocks up $7, trading out at 13.40. Silver up 9 pennies at 22.71. Light sweet crude back 68 cents at 96.19 across the globe. We've got the FTSE up 39 points, a little over 0.5%, 0.6%. Same thing in the DAX. It's up 0.6%. That would be 55 points. And the Nikkei closed up 60 points last night. The Hang Seng off 164. And the Shanghai down 20. Our call-in number is 877-927-6648. Let's go peek in on the crossroad between the bulls and the bears right now as we take a look at the 30-minute chart of the ES Mini, what you're going to see here, a thing of beauty, you can see the road sign is up that the bulls are at work here trying to defend a position. Why do I say that? Well, if we just take a look at the three most recent swing points, and the swing point is where you see a change in trend in the marketplace. So that first change in trend coming in at yesterday's low at 11 o'clock in the morning, that was out at the, it just changed, just by, well, that's okay. We'll go ahead and use our imagination here. And if we go from that low all the way up to the high that was put in here at the time frame of 2:30 this morning. By the way, the low yesterday, 1734.50. The high that came in at 2:30, that was at 1751.75. Basically about a 0.382 retracement. Right now it says 0.43, so you had a 0.382 retracement there. A 0.786 retracement off of the swing point here. Came in at 6:30 last night up to the same high. That 6:30 evening swing point at the price level of 1740.75, and we did, just as we were coming on the air, had a 1.272 expansion of a smaller set of swing points out here. Looks like this area may be failing, so let's go see where is the next area of support. Now, we had three Fibonacci numbers coming together at the same point in time. We had 0.382, 0.618, and 1.272. The tool that I've got on my screen, it works fluidly, so as price changes, so do the percentages out here. So if this area that we're traveling in right now inside the ES Mini, the 1744 level, fails, 1741 will be next on its cards. That'll be the 0.618 retracement from the low to the high that we have seen out here in the marketplace. Now, let's go take a look at the daily charts. Let's look at the daily index futures for each of the futures contracts. Yesterday, the bears really had the opportunity to put the pedal down. They were unable to do that. What we're going to be watching here today, really two levels. The two levels we want to be paying attention to. Number one is the high from Tuesday. That level, 1754.50. If, in fact, the ES Mini can get above 1754.50, and I mean close above 1754.50 today, number one, it'll take out a 1.618 butterfly sell pattern. We have not gotten any kind of sell signal. We only have the pattern out here. Yesterday could have been the sell signal, did not come through. So if we see price move above 1754.50 on the daily chart, that sets up that move to 1776, 1777, somewhere in that range. How do we come up with that range? Well, if we just simply take a look at our A point, that's the swing point from June 24th, that low out there, 1553.25. Your B point you can use on the futures contract, either one, August 2nd or August 3rd. Both are at 1705. Your C point is the retracement down in the August 28th level, 1624.75. 1-to-1, A to B equals CD would take us up to 1776. So if you take out this sell pattern here, that is the likely move that, in fact, would unfold. Now, the other area that we want to be paying attention to, most certainly today, is the 1736 range. In fact, if you the exact number, you'd want to look at a 1737.75, but I say 1736. You want to see it close below. You don't want to see it. If you see a close below, let me restate that. If you see a close below 1736 today, that would be a bearish signal in the marketplace. That would be a confirmation of this pattern, and that would then set up a retracement. So the market is at a precipice here. We'll see whether we're going to get movement one way or another, or just simply a move sideways, just working off of an overbought condition. If it's a move to the downside, if we get below 1736, then the logical area is going to be 1683 in the market. So you got 1683 to the downside, 1776 to the upside, and we won't know anything, quite frankly, until we get over 1754.25 or below 1736. And I'm not referring to intraday. I'm referring to a close at the end of the trading session. And that is on the ES Mini. That's on the S&P futures. Now, let's go take a look at the Dow futures out here, which has been labeled, which is linked as the weak index out here. And, it is weaker as we take a look at it compared to the others. But, how weak is it really? Weak is probably a overstatement of facts out here. But nonetheless, as we take a look at it, what the Dow futures have done, if you go from the session high from a September 19th, that price level 15,658 down to the swing point low on October the 9th, what you will see is price stopped really right at the 0.786 retracement level. So they make it up to that level. That was on Tuesday. They actually get up to 15,459 versus 15,442. That still works for us. And then we actually had what is normal whenever you get up to these floors, unless you have a wide-ranging bar. If you get a wide-ranging bar coming into one of these floors, and again, the floors we look at, 0.382, 0.618, 0.786. If you got a wide-ranging bar coming into that floor, it's telling you know what? No one hit that button to get off on level 0.382. Instead, you're going to go up to the 0.618 area. And in essence, that is what we saw take place inside the Dow. Gets up to that third level, 0.786. So if there's a close above 15,442, and there is no sell signal inside the Dow out here, so that says that what it will do is, well, one of two potential things. Number one, there's a consolidation zone, about a 1,000-point consolidation zone, maybe in the 15,530, 15,540 type range. If it can make it there, it's going to try to bust through the consolidation. And what does that mean? That means it'll go at least attack the swing point from September the 19th, the low of which is 15,557, the high of which is 15,658. If it's coming in there with volume, if it takes out 15,658 with volume, then the next move up on the so-called weak link out there will be 1,000 points to the upside. If, on the other hand, it can't bust it up, guess what the Dow will try to do? It'll try to bust it down. And that's another 1,000-point move to the downside into that 14,600-ish range out here. So a big, wide consolidation pattern inside of the Dow. What the Dow is going to need, it's going to need help from its friends, though. And the friends that it really needs help from is going to be the NASDAQ futures out here. NASDAQ, now not the futures contract. The NQ did not have a key reversal session. Only the index, only the composite, only the NDX 100. But this session right here from October 22nd, not a key reversal session. You did have a little bit of a bearish engulfing yesterday. But still, the market's going to need help from its friends, the NASDAQ. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see here. Right now in the futures market, Dow's up 36, S&P is up 2.5 points, and I can't recall which show it was on, whether it was the first hour or second hour yesterday, but had a call yesterday, and it was about Apple, and the question was with regard to a hanging man candle out there. Now, look, I believe that candlesticks are always providing us with information about the marketplace. So, I was thinking about it earlier in the day, or later in the day, I should say. And I didn't answer the question. I answered the question that yesterday on Apple did not form a hanging man candle out here. Now, I'm going to take it to an actual hanging man candle just so we can take a look at it. And that's right here. I'm inside the QQQ, by the way. Now, the call yesterday was on Apple, so I just simply wanted to go out and found a few of them here that actually qualify as a hanging man candle out here. Now, a lot of people, there's a number of bearish and bullish reversal signals that are out in the marketplace. Now, only some are really signals that you need to be paying attention to. There are a ton of folks that believe that a hanging man is a bearish candle. So I want to take this, I want to teach you something, or at least I want to teach you Stevie's view of the hanging man, not just my viewpoint, but how they actually trade. So yes, it is a bearish candle under Japanese candlestick, but it's not a bearish reversal signal out there. In fact, take a look at this candle. Now, bearish, in order for a hanging man candle to form, the market has to be moving up. A hammer candle looks just like a hammer candle, but in this case here, price is moving higher. A hammer candle only occurs when price is moving lower. So here we're taking a look at the Qs, and we're taking a look at the Qs. You can see I'm looking at the trading session now of June the 19th out here. There was a downdraft between June 19th and June 20th. Downdraft with about 60 million shares. Price makes its way down, looks like either to a trend line or a channel line. Let's not worry about that at this stage. And then works its way up. And on July 5th, as the market opens back up after the holiday, there is what is formed here as a hanging man candle. Now, when you take a look at this candle, number one, you have to take into consideration what? The market is moving higher, right? So the market is moving higher in order for there to be a hanging man candle. Number two, what this is telling you, in this case here, it doesn't matter whether it's a green body or a red body out here. In this case, on the Qs, the open was at 72.45, closed out at 72.58, so a small-bodied candle with a long lower shadow out here. Now, when you take a look at this candlestick out here, certainly intra-session, so during the trading session, the bears tried to exert some force by pushing prices lower. But the bulls at some point in time stepped right in and said, no, 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 and moved up here. Folks, how can you take a look at this candle and say that that is bearish at all? In fact, when you take a look at this one, it closed almost at its session highs. the hanging man candle, it's not a candlestick that you really need to focus on or worry about out there. It is the least of all of the single bearish candlesticks that are out there. So don't be worried about the hanging man candle out here. And I'll look for some of them and some other charts out there that we can take a look at. If there's a market that's going to reverse, it's not going to be because of the hanging man candle that is out there. So I just wanted to be able to cover that. I might need to cover that in the next hour as well, just kind of briefly. But and I can go back and take a look at hanging man after hanging man out there, and that's what you will see inside the marketplace. Do you want to pay attention to the candle that forms after that? Yes, most certainly. Maybe it's not even a stalling candle because the bull's still in control of the market session out there. In any event, let's go see what is moving here in the pre-markets. We have a number of companies out with earnings. Ford just blowing away the doors here. See what Ford is trading at right now. Last trade firing off at 18.01. Let's go take a look and see what it is doing out here. It's going to have a nice gap up this morning. Looks like Ford is going to go ahead and take out its most recent swing point. That being the trading session, let's see, September 18th, it made a high of 1777, made a high 1777, whether it's the 18th or the 19th out there. Both. Let's take the one with the most volume. You've got 45 million shares. So Ford right now trading out at 18.02. It's going to gap above that. If it does that with volume today and closes back above 1777, you'll have a confirmed A to B equals C to up. Let's go take a look at where that will take price to, or where it's projected to take price to. That looks like the trading level of about $18.42. That is the smaller of the A to B equals CD patterns out there. Inside of Ford, there's larger A to B equals CD patterns. There's the one that would come off of the low from June 24th out there as well. So Ford having a nice morning. And let's see, you got McKesson Corp. That's up pretty large. Under Armour looks to be underwater this morning. They closed at 83.98. They're trading down at 78.92 right now. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 49 points, trading out at 15,462. S&P up 3. Trading at 1749. Composite up 7 points at 3913. Russell 2000 up 2.5 points at 1113. Apple down 87 cents. Google up off $1.79. Leading the charge to the upside here is McKesson Corp. MCK. Man, what a rocket ship this thing is, up $10. That's up 7.5%. Equinix, EQIX, up 4.5% this morning. That's up $7.60. Texas Capital Bank up $6.45. That is up 13%, 11% now. F5 Networks, FFIV, having a nice morning. Generica Holdings, Generac, I should say, Generic. GNRC, that is up 8%. You've got Agnico Eagle Mines, AEM, up 12% this morning, up $3 and change out there. Amazon up $3. Tesla Motors up a couple of dollars. Fortune Brands, that's up a couple of bucks here. Arctic Cat, ACAT, struggling this morning, off 15% as we speak. That's down about $9. O'Reilly Automotive, that's off 6%, down $8. Timken Company, TKR, is their ticker symbol. They're off 8.5% this morning. Under Armour down 6%. That's off $5. Akamai Technologies, AKAM, off about 9%, off $4.65. TripAdvisor down $4 and change. Let's quickly, I'm going to go back here to one more hanging man since I was talking. I'll take a look at the Ford chart out here. It is actually a hanging man that I see here in Ford, taking us all the way back to December 27th. It was Brian in Jackson, Mississippi, that had asked the question yesterday. So here's another hanging man candle that shows up on the chart. This one you can see here with a red body. So it doesn't matter whether the body is green or red. It looks just like a hammer candle, smells just like a hammer candle, only it is occurring as the market is moving higher. There is no way, folks, that this candle here is a bearish reversal signal. A bearish potential candle, sure, but reversal signal, no. Do not be worried about seeing a hanging man candle. Pay attention to the candle that maybe forms after that, but this is one where this candle here tells you that the bulls are really still in control of the markets. In any event, let's go take a look at some of these stocks here that are popping and dropping. Let me switch tabs. Oh, I am in the earnings tab. So let's go take a look at the leader in the clubhouse to the upside. McKesson, MCK, is the ticker symbol, gapping up, doing it with some nice volume here already this morning. Let's see what their numbers came in at. They had to produce some numbers out here. They did revenues of $32.95 million versus 29. Boy, that's a nice increase. Net income for the second quarter, about on par, $404 million versus $401. But, man, take a look at this stock. I believe this is at all-time highs. Let's put it on a monthly chart. Yeah, just take a look at this A to B equals CD. So 156.08, would complete a 1 to 1.618 A to B equals CD to the upside, but it really wants higher price. It wants to move up probably into the 178 range out there. So a nice-looking stock. This is coming off of the lows back in 2008 of $28. So what does that make it? About a 4, 5, 5, 5? Yeah, at least a five banger out there. So that is on McKesson Corp. Precision Cast Parts, they're trading up to the upside. They're up $7 and change. PCP is their ticker symbol. So let's go take a look at Precision Cast Parts out here. That is gapping up this morning. I've had this on my buy list, was looking for this to pull back a little bit further. Hey, pulling back here this morning. So the B point on this is the trading session from July 25th, the high out there, 238.99. The volume on that trading session, about 1.6 million shares. It's got 135,000 shares so far. Today will be the test as to whether or not it's got the volume to get up and over that level. If it does, Precision Cast Parts ought to trade up to the 270-ish range, maybe even 286.57. So that is on Precision Cast Parts. Now, let's go take a look at the other side of the auto segment here. O'Reilly Automotive, ORLY. That has been a high flyer, I believe, but this morning here, gapping down with some volume. Now, they are out with numbers as well. They reported net income of $186 million versus $159 from the prior year, so not bad on the bottom line. Their third quarter revenues also not too shabby, $1.73 billion versus $1.6, but they just simply must have missed their guides, missed their estimates. So gapping down this morning, still not too bad out here. We'll see what kind of volume this thing has off of the high. So far, 391,000 shares this morning on the gap down, coming into a swing point that only has 666,000 shares. So that takes us back. Now, this did have a breakout session, so let's go take a look. Let's draw the line across the screen on that breakout session here. That would be the trading session from July 25th. Let's put a line across there. You can see an unfilled gap and also an untested area inside of O'Reilly Automotive, that 120.80 level. Now, it's got nice volume on that session, 1.8 million shares, but, so far this morning it's got a lot of volume coming out of its engine out here, so we'll see if that area is going to hold. That is where it's likely going to trade back to, is into that candle from July 25th, more likely get down and try to test the low of 120.80. Now, if it doesn't do that today and volume starts to lighten up there, maybe that becomes a support area. Maybe this thing starts to trade in a consolidation zone here for a while. This did have problems once before. This was back in the June 2012 time frame. There was a big volume bar to the downside, 12 million shares out here, but it has had some signs of strength as it has clawed its way back. Three little signs of strength out here. We'll see where this thing trades to. We'll pay attention to this tomorrow as well. Let's go take a look at what else do we have. Arctic Cat, ACAT is the ticker symbol. Let's go see what this is trading into. This is gapping down this morning with pretty darn good volume, unfortunately, for Arctic Cat. Let's see if they produced some numbers as well. They were out with revenues, did net earnings, 23.3 versus 24 million shares, 24 million from the last quarter. Give me a moment here. Let's see if I can find their sales, net revenues here. Sales of 238 million versus 229. But Arctic Cat gapping down with some big volume. So far, 145,000 shares. If we take a look at the high volume bar that this is probably is going to head down to, looks like it would try to head all the way back to December 20th, 2012. That low volume, high volume low bar out there, my apology, that is on, got 935,000 shares out here. So taking out a swing point this morning, doing that with volume. Most recent swing point was from October the 8th. That only had 159,000 shares. You're exceeding that as we speak here right now in just the first few moments of trading out here. Let's go take a look at, just take a scan here, Texas Capital Bank, TCBI, not to be confused with the yogurt. What's the yogurt place? TCBY probably, right? Yeah, this can't be yogurt. Well, TCBI, this can't be Texas Capital Bank. But this thing is popping to the upside, gapping up with some nice volume here this morning, taking out its most recent swing point, getting over a resistance area, a big bearish engulfing candle. That's from the trading session of July 24th. That high out there was $50.11. It is up and over that at 1.5 million shares so far today, 324,000 shares. So it's taking out a B point of an A to B equals CD up. Let's go see. It looks like it might be making that all in one trading session out here. Let's take a look at. No, it's not. But the A to B equals CD up that now looks like is being confirmed on Texas Bank, Capital Bank out here. It takes you to 55.48. Now, intra-session, this thing has gotten up to 54.71. 55.48 will not be its next stop, assuming that it can hold the B point today. More likely, this will trade up into the 58.72 range out there. Let's pull this back. So this thing is out over its all-time high. So let's pull this back on the monthly chart, and yeah, most certainly is. So on a monthly basis, it's trying to close above the month of October 31st. That had 12 million shares. Now it looks like it's going to be quite a bit short of that volume unless there's huge volume that comes into this over the next, how many trading sessions are actually left in the month out here? Today's Thursday, so probably only about 3 or 4 trading sessions left in the month. So it's not going to have the monthly volume to get up over this. Let's take a look at the weekly on this equity. So the weekly chart on this has the swing point volume. First, we'd take a look at October 5th. That's got 1.8 million shares out there, so it may have volume to get over that level, and that really is a resistance point. So that would say that in the case of Texas Bank, let me get this, Texas Capital Bank, if it can close above 52.17, 52.17 ought to be support for this equity. Let's go take a look at some of the commodities, see how they're behaving here this morning. You've got gold up $9 and change. Let's take a look at gold, see what it is doing, if it's trying to break out above its most recent swing point. Yeah, it is, which is a nice volume trading session day from October 22nd, the high of which is 1344. You're at 1343.70. If it can, let's take a look at retracements that we've done so far from the swing point of August 28th down to the swing point low on October 15th. The target here, 1364, should be able to make that move here shortly. That is your 0.618 retracement. And then if it can close above that, the next level is going to be 1394. That's on Goldilocks. If we take a look at silver, we got silver trading up 15 cents right now. It is already above its 0.382 level. It's on its way to 23.53 out here. Volume on that trading session from October 22nd, about 30,000 contracts. So far today, 18,000 contracts. Let's take a look at light sweet crude. That is trading down about 63 cents. Again, our target area here for light sweet crude looks like it's the range which it's trading into right now is in that 96 area. 95.78 is the exact 0.618. And you can see just a tad below that in the 94 range, 93.82 to be exact. That is your 2.618 expansion of its last set of swing points. So it looks like, and it is certainly into the oversold territory, utilizing that 14-period relative strength indicator out here. You can see the last time that we saw light sweet crude down to that level was when it made its lows in April out here. So far, actually not behaving too badly. Could be setting up a Gartley buy pattern. And I expect we will see light sweet crude begin to bounce here sometime between the price, I won't give you the time frame, but somewhere between the price range of about $93.80 to 90 to where it's at right now, around $96 out there. If we take a look at bonds moving a bit higher today. Bonds trying to at least complete the 1-to-1 A to B equals CD. Let's go ahead and expand this out here. Let me put the different levels out here. So the 1-to-1 A to B equals CD on bonds will take it to the 137.05 level. Now the B point is the trading session from October the 2nd. I show 328,000 contracts, and it got above that with 312 on October the 17th. So, it's above it on a little bit lighter volume. Let me take that back, because really the trading session of October 22nd, I show, no, that's not it. I thought I had 342,000 contracts out here. 342 on October 23rd. Well, it's on its way certainly to the 137.05 level, but this move here on the C to D leg is showing a bit of strength here inside of the 30-year Treasury. So that says, you know what? Maybe it wants to head up to about the 138 range. Now, what we can also see is that the dead cat bounce, the 0.382 level, if we go from the session high from May 1st, May Day out there in 2013, all the way down to the low that came in on September the 6th, what you will see is the 0.382 level around 136.20. So in this 136.20, 137.05, it ought to find some type of resistance out there. Now, whether or not that's going to be the extent of the move, can't say. What I can tell you is that it is traveling along the strong side of the C to D leg. That says it wants higher price, and the retracement here was pretty darn shallow. So we'll see if this thing starts to trade sideways. It is also moving towards its overbought condition. If we take a look at the last time it was up at these levels, well, it takes us all the way back into the May highs out there. So we'll have to keep a close eye on bonds. If we take a look at natural gas out here, natural gas pulling back into the hammer low from the trading session of September 26th. I'm looking at the December contract as we speak right now. That level is $3.62. Right now we've got the Dow is up 36 points. The S&P is flat, off 47 cents. The NASDAQ is up to Russell 2000, up 82 cents out there. Let's go take a look at the currency market, see what we can find out here. Let's go take a look at our favorite currency pair, the Euro-Japanese yen. Now, the Euro-Japanese yen here, yesterday we pointed out that it, as it was making its low, did it with less relative strength, gave us a divergent pattern out here. It got up above that swing point from 4:30 in the morning yesterday on October the 23rd out here. This is signaling to us that it actually wants higher price. Higher price ought to put a little energy into the markets. Next level here, well, it already hit that 0.618 level. Higher price would say about 135.09. That's on the Euro Japanese yen. 877-927-6648. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, the Dow's up 53. S&P is up just over a point. The NASDAQ up 7. And let's go peek in on the currency markets here. Let's go check out the Queen, see what the euro is doing right now, completing its 1-to-1 A to B equals CD. The price objective there was 1.38. Even, Stephen, you're trading right now at 1.3802. You had a little doji candle form yesterday. That should have acted as a potential resistance area, the high of which is 1.3799192 out there. So a close above that says that the euro wants to motor higher. It is in an overbought condition out here. This is a daily chart that we are looking at. If we go take a look at the weekly chart. Give me a moment here. We looked at this yesterday. It's going to start running into, here's the weekly chart out here. The weekly chart is now showing that it's getting very, very, let me blow this up on the screen for you. It actually looks like it hit it. So far what it has done today, it's hit the top of the price channel. Let me pull this back here further. So the blue lines, the blue diagonal lines that we're looking at inside of the Queen, you can see that is a long-term descending price channel. That takes you all the way back into the 2008 time frame. And I'm going to go ahead, I'm going to remove the butterfly pattern out there. The next, I just got rid of the trend line. So there's a better look at it. Now, it's a weekly chart that we're looking at. If, in fact, it gets above this channel line, boy, it's got to make you say, something to think about. Or at least it certainly makes me say that. Why? Because what it's now done, the 100% move of a move, and the next move on that inside the euro would go ahead and take you all the way up into the butterfly pattern. And that butterfly pattern, I'm going to go ahead and put the trend line back up here. We'll go ahead and try to color this. That was not a good call. Let me try to do this again. So there's a trend line just coming off of the actual extreme high out here. So that would really be the next area of some resistance here. But on a weekly chart, we've only got one more day, day and a half left in the week out here. The euro is looking very, very strong, unlike the U.S. dollar index. If we take a look at the U.S. dollar index, this is, I believe, the monthly chart. Yeah, here's a monthly chart for the U.S. dollar index. Now, what is it about this chart that you can see that's bullish out here? Poof. Really, on the monthly chart, not a darn thing. This says that on the monthly chart here, it's trading into the monthly swing point from February of 2013. Right, and you did have a reversal signal. You got a bullish engulfing candle that took place. There was that little doji. Again, to me, the doji doesn't mean anything really at the lows. At the highs, it does have meaning out there. And as we take a look at this U.S. dollar index on the monthly chart, says it's going to go at least test the lows at 78.92 out here. But, boy, take a look at this waterfall cascade from the highs out there. Nothing bullish about that stock chart whatsoever. That is on the U.S. dollar index on a monthly basis. Let's take a look at the other time frames out here. Let's look at the weekly. The weekly chart, this has got a 1-to-1 A to B equals CD that says 78.58 is written all over it. That's going to also be testing that low at 78.92. I'll go ahead and get rid of that red line here. Makes it a little bit easier for you to kind of see what we're looking at out there. So there's your 8. Well, I've just deleted the A to B equals CD. I meant to change that to a blue color. Let's do that here. But a big, huge downtrend inside of the U.S. dollar index. There you go. So 78.59 is its target on the weekly chart for the U.S. dollar index. Folks, if you are off to start your Thursday, have a terrific Thursday. And I want you to remember this one very important thing, and that is this. You have an amazing power within yourself. And that power, folks, it is so strong, it'll create a life of abundance. It'll cure incurable diseases. It will build billion-dollar businesses, paint magnificent masterpieces. But the most important thing, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Thursday, folks. Look forward to seeing you soon. Take care. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.